please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Market's in a fine spot, you will have to say. There are about 2.5 stocks in the green for one in the red. And that's what 70% of the market is in the green compared to yesterday. So you'll have to say that 1/3% on the Nifty and nearly 0.5% on the mid-cap index is a great spot to be in after the market has made 43 record highs in the last 1 year. So we're not very badly off compared to the US either. With that backdrop, let us invite someone who has not been speaking very often on television. Jayesh Gandhi of Birla Sun Life AMC is joining us on sidelines of the CFA Institute India Investment Conference. Morning, Jayesh. Thanks a lot for joining us. Do you think that the investment culture is now strong enough in India that even if we have minor irritants like an LTCG being imposed, this will continue?
Yes, I would like to believe so, that over the last 2 decades, when institutional investors have become a bigger force compared to earlier when retailers were much bigger participants in the market, in the last 2 decades, the action in the market, plus the fact that there is fair amount of education which is being spread by the institutional investors across the country, has made the Indian investor mature to take the best opportunity which is available in Indian equities for the investors. And we should actually be very proud of a robust capital market, equity market that we have in this country. And it's something to be really happy about, and an opportunity for investors to invest into, which I'm pretty certain that Indian investors realize and are ready to take advantage of.
Yeah, Jayesh, good morning. And that point is taken, but the problem with this argument now is that a lot of investors who are new in this market have seen 40% kind of CAGR in mid-cap funds over the last 3 years. In certain cases, even 50 to 60% CAGR. So, how do you tell them to temper down expectations? Or do you think there's no need to temper down expectations? We could have these kind of gains over the next 2 or 3 years as well.
Well, future is, nobody can really see it, and I'm not going to be the one to try and predict. But please understand, and which is what we try and communicate to our investors as well, that the gains made in the mid and small cap space in the last 2 years are the cumulative gains that the investors made because of a bear market in mid and small cap in the year 2011, 12, and 13. You guys have been around, many of our investors also been around, I've been around. We had a massive bear market in mid and small cap equities in those 3 years. And what has happened in the last 3 years is a catch-up in that space, and which has led to big returns. Obviously, over the long period of time, the returns are much more sober in the mid-teens or low-teens range, and that is what investors with the long-term view should expect, and that is what we try and communicate to our investors as well. Having said that, can the bull market, which is what we are currently in, have a much larger bang or a much larger growth for small and mid caps? It's traditionally always been the case, and we see this time also around not being any different. So while there is a lot of skepticism on small and mid cap valuations, etc., we do believe that over the medium term, which is next 3 to 5 years, small and mid cap will still outperform the large caps.
Okay. Jayesh, hi, morning. I wanted your thoughts specifically on the housing finance segment, because in your mid-cap fund, you have high amount of exposure there into names like PNB Housing, Repco Home, etc. And now we understand that the affordable housing segment is seeing slightly higher NPAs than before. Would that concern you?
Not really, because some of the names that we have in a portfolio have very strong risk management systems in place to ensure that NPAs, non-performing assets, remain under control. Having said that, let me dwell a bit on the overall macro picture for the sector. It continues to remain very robust. It's no-brainer for anybody, any investor, to see that there is a massive housing shortage in the country. I think this government has, after a long time, addressed the issue by providing a large number of good incentives for low-cost housing to really boom, as well as salaried class and the non-salaried class to really take up housing or invest in housing in a big way. The meltdown in the real estate is actually a boon to the sector, because now houses across the country are now affordable for people to really buy in. So as we see the medium term, we see a significant acceleration in house consumption or house purchases happening. And that, to my mind, is a big opportunity for housing finance companies to lend to.
Well, Jayesh, you know, at AB Group, you all tackle all areas of NBFC or finance. What will be the pecking order if you have to put incremental money? Will it be housing? Will it be consumer finance? Will it be insurance? Will it be mutual fund? What is the pecking order?
Well, I'm the wrong person to ask regarding the AB Group.
No. Jayesh, I'm asking you as a fund manager, if you have to put extra money, which will be the best area?
Well, housing finance is an area where we already have a fair bit of exposure, and we believe this is a 3 to 5 year or probably a decade-long compounding story, which we're very, very bullish on. Obviously, the other areas of finance, which is NBFC, multiple lending opportunity exists for NBFC, particularly because the large group of lending institutions, which is the PSU banks, which even currently commands around 65-70% of the total market, is not lending. And that throws a huge opportunity. Also, the unbanked, or the section of the population which was not being addressed by the banking industry, is now being addressed separately by the non-banking institutions, such as microfinance, such as rural lending institutions, etc., etc. And that, what we have seen in the last few years, is a great business model, assuming it is run properly. So there's a massive top-down tailwind available. At the same time, if you pick the right stock, then can be a multiplier, a wealth creator for you, for the portfolio as well.
Okay, Jayesh, you have a great conference. Thanks so much for stopping by and speaking to us. That's the word coming in on the market. But let's get a quick roundup on what's happening in the commodity space this morning. Manisha Gupta joins in with more. Hi, Manisha. Good morning.
Morning, Sonia. Thank you so much for that. Well, let's start with the crude oil prices, where we are winding down the second week of 2018, and we are already up by 5% when it comes to the crude oil prices. The only concern in this space really is the speculative long positions, which are at record highs, whether it's futures and options, and that really is worrying the markets. Having said that, we did see $70.05 for the Brent crude oil prices in the New York session yesterday. It has not been able to hold on, has seen some profit taking in the global markets, and that's the reaction that you have seen coming in for the Indian markets as well. More than 1% on the lower side is how we've opened. But mind you, we're still holding very well above 4,000 rupees per barrel for the Indian markets right now. The gold and silver prices have had their run as well. The US dollar has weakened. You have seen the euro and other currencies gain. A statement from ECB signaling that they might be looking to winding down their stimulus purchase program of €2.5 trillion is something that's done well for the gold and silver prices. So we are holding above 13.20. We did see 13.30 as well in the New York session yesterday for the global gold prices, and that's the kind of support you have seen continuing for both those precious metals. It's a fifth weekly gain that we are closing for the precious metals as well. So it has been a good upward trend that the sector has put out. The industrial metal space also has done quite well. After that initial correction that we saw in the mid-December, it actually has been a buy on dip opportunity continuing for this sector as well. You have the copper prices trading on a firmer note. It's flat to positive is how most of those metals are trading. It is a third straight day of gains coming in for most of them. The markets are looking at a steady deficit continuing forward for many of these metals. And of course, the data has been quite positive, as we saw coming in from China today yet again. So this is another place to see buying continuing as well. Trading strategies, and we have them from Trends, which have a buy across sectors. They are looking at 29,650 on the higher side for the gold prices. They have a buy on silver as well. 39,600 is a target of that. And copper continues to be a buy for them with targets of 462 for the day today.
Can you stay on for a word more, Manisha? Crude touched 70 and moved back. What are your global experts telling you? Is this more likely to conquer 70, or will that be a strong resistance?
Well, you know, the markets are saying that you are looking at a bit of a overheating coming in for this space. 70 was a target that we were looking at for first quarter of 2018, and it has been done in the first 15 days itself. So while, of course, the fundamentals are positive, but the big concern really is the speculative longs. A small bit of a bearish news coming in and you will see a huge profit taking. That is what is really worrying the markets. Fundamentals are still strong. We could see sustainability of prices, but it's just that bit of speculative money that could really move either ways.
Big story this morning. Sources say that merger talks between IDFC Bank and Capital First may be in the final stages, though both managements remain non-committal on the news. Remember, you heard it first on CNBC TV18. The stocks, though, have come under pressure this morning following the heady rally of the last few days. Capital First is holding up. Manish Oswal of Nirmal Bang Securities joins in to track this action for us. Manish, it seems like there's lots for Capital First to gain from this merger. You know, they'll get a banking license, they'll get assets in the form of deposits, etc. But you tell us, what's your own understanding of what could be the pros and cons of this merger?
So if you look at both the companies, first let's take the Capital First. Capital First is an NBFC basically focusing in two major segments. One is consumer durable segment, second is LAP, and other is SME and personal loan segments. Their cost of operation is cost of funds basically 8.5 to 9% kind of thing. So if they are going into a merger, then immediately there will be benefit in terms of cost of funds. That is one strategy point. Secondly, now reaching a balance sheet of that size, and IDFC Bank looking the retail franchise so that they can build the deposit of retail deposit much faster way. So we had seen that last time also. Shriram Transport, they tried to acquire that thing, but that could not take place because of valuation issues.
So Manish, good morning. So in this case, what do you think would be a good valuation? What kind of swap ratio?
So if you look at the FY19 book value of Capital First, it is 324 rupees. So if you apply 3 times price to book, which is reasonable given the quality of book and the automated operations and the segments where they operate, because the second best guy in the market is the BAZAAR Finance, which is a very strong valuation. So 3 times we can easily put to the this thing that works out 970 rupees valuation for Capital First.
Okay, and therefore the swap should be according. We'll take your point on that. Manish Ostwal, it was a pleasure speaking with you. Thank you very much for joining us with your take on the two companies and the potential when they merge. Well, we have some interesting bites coming in from mutual fund veterans.
Yeah, well, yes, the start to the new year has been shiny for most mutual fund managers as markets hit all-time highs. But is there any caution in the system, or will the going be as good as last year? I caught up with some of the big minds in the mutual fund industry at the launch of Anuj Shah's book, Brightest Investment Minds, and the consensus is that we are not in a bubble just yet. Listen in.
I've spent 3-4 years trying to communicate to everyone that we are in a real estate bubble. And at that point of time, people didn't agree with me. But after that, there will be no returns in real estate. You can watch what people around you are doing, and you will realize that you are now in a real big boom. For a bubble, you need a parabolic move.
There's no country in the world where bonus shares are valued like Indian tax authorities allow. It's a legal loophole which loses government 25,000 to 30,000 crore every year. So instead of taxing long-term capital gains tax, please stop bonus stripping, please stop dividend stripping. You achieve the same objective without disturbing the momentum of the stock market. I think there are better ways of doing it.
People will invest in the market if they see their money to be made in the market, right? And that is the most fundamental reason. So if the belief is that things are looking better, the economy is coming back in shape after the reforms, what we have seen, then sentiment, there could be a knee-jerk reaction, but I think should not really alter the broader course of the market is what I believe.
Yeah, I think Nilesh makes a very valid point. This bonus stripping and dividend stripping is a legal way of technically avoiding tax. So, of course, you have a discussion on LTCG. That's a different debate. But this may be a loophole which has to be plugged.
Absolutely.
Clearly.
No two ways about that. Okay, well, that was some interesting points about the Indian market, and we will get you more of that conversation which Sonia had with veteran fund managers. But here's some more interesting and very important views. In a bid to find a buyer for the debt-ridden national carrier Air India, the government very recently, earlier this week, opened the doors to foreign carriers to buy a piece of Air India. Shireen Bhan spoke with the Minister of State for Civil Aviation, Jayant Sinha, on a host of issues concerning Air India's disinvestment process. Listen into that exclusive conversation.
You have now, by way of that cabinet approval, allowed foreign direct investment up to 49%, but ownership and control 51% with an Indian entity. Is the government going to divest 100% stake? Will it be full privatization or not?
It will definitely be a strategic disinvestment, Shireen. The exact sale in terms of the share that will be offered as part of the disinvestment process and the stake that will be held by the government will be decided by the alternative mechanism that's headed up by the Honorable Finance Minister. But it is a strategic disinvestment, which means more than 51% will certainly be offered.
Okay, more than 51% will certainly be offered, but I would imagine that a final call, while it will be taken by the group of ministers on Air India headed by the Finance Minister, the thinking at this point, sir, you've had several meetings already. I'm not asking you to give us a sense of what the decision will finally be, but what is the thinking in terms of the government holding on to some residual stake?
I mean, there are various considerations that obviously come into play, Shireen, and you've seen that in the FDI decision as well, which is that we want this decision to continue to ensure that Air India remains an Indian carrier, that it remains a domestic carrier. It is controlled by Indian nationals and it retains its Indian ethos and character. And so all of that will be taken into account when the decision is made, first with respect to how much will be disinvested during the sale process, and secondly, how much of it will be offered for FDI. It can be up to 49%, but those are the decisions that the alternative mechanism will be making with respect to what we will be offering up to bidders as part of the disinvestment process.
Let me also ask you about one of the other considerations. You've got one unsolicited offer, and that's coming from India's Indigo Airlines. And there, very clearly, Indigo had stated that they would be up for the international operations as well as Air India Express. What is the thinking at this point in time in terms of either offering a single integrated network or, in fact, splitting up domestic operations and international operations?
There, I think we are quite clear, which is that we want to offer a single integrated network that includes both the international operations as well as the domestic operations. That is what will maximize the competitive position of Air India going forward, and that's really what I think we will offer as part of the sale process.
Okay, so the key learnings from here are that it looks like they've allowed the foreign entry more to bid up the price, but not to give up control. We will get you more of that conversation, but as we wind down on Bazaar, Anuj, you will have to say that the early morning has gone to the bulls.
Oh, it has, and new highs for the index, new high for the mid cap. Just keep an eye on oil and gas. The top gainers right now, or the top hourly gainers right now are MRPL and Mahanagar Gas. So just a couple of these stocks are looking
on a day when the raw material is expensive.
Exactly. I don't know if the market's sensing something, especially on gas, but Mahanagar Gas is the high point right now.